Listen up. If your chart looks like a subway map, you're not trading, you're just coping. Like, I'm dead serious. I'll pull up some of your charts and it's just lines everywhere. Support, resistance, fib, VWAP, session levels, order blocks, trend lines, fair value gaps, channels. Look, you got more lines than the New York transit system. Here's the truth. If you need 25 levels to take a trade, you don't have an edge, you have anxiety. Because most of your levels aren't even levels. They're just excuses. They're excuses to click buy, excuses to click sell, excuses to feel like you're doing something, when in reality, you're just guessing with extra steps. So today we're going to fix that. I'm going to show you why traders do this, why it's killing your execution, and how to build a clean chart with a hierarchy that makes you money. Let's get into it. All right, so let's talk about what's actually happening here, because the problem is not that you're bad at trading. The problem is you're marking levels like you're scared. You're using too many indicators, and I get it because everyone does it at first. You go to TradingView, you start drawing lines, you mark every single swing high, every single swing low, every little bounce, and pretty soon your chart looks like a damn crime scene investigation. But here's what's really going on. You're not marking levels because you're disciplined. You're marking levels because you don't know what matters most. That's it. And instead of admitting that, you go, oh, I just need more confluence. So you add more lines, more zones, more tools, more indicators. Because in your head, you think more information equals more accuracy. But in trading, that's backwards. More information does not make you better. It just makes you slower. It makes you hesitate. And hesitation, that's expensive, because every time price moves, you're staring at the chart like, is this the level? No, wait, it might be this one. Hold on, I have 3 levels right here. Okay, maybe it's bouncing. No, wait, it broke. No, wait, it wicked back. And now you're frozen. It's analysis paralysis. And you don't pull the trigger when you should. You chase when you shouldn't. And you end up taking trades out of emotion instead of out of execution. And the biggest issue is this: levels are not equal. I don't care what anybody tells you. A weekly high is not the same as some random 5-minute wick from yesterday or a fib level. A daily low is not the same as some mid-range bounce that happened during dead volume at 3 a.m. But when you don't have hierarchy, everything feels important. Every line looks like support or resistance. Every candle looks like a signal. And that's why most traders stay stuck. So listen to me when I say this. You don't need more levels. You need a ranking system, because the goal isn't to have the most lines. The goal is to know where the market is most likely to make a real decision. That's trading. And the real reason that this happens is because most of you never even learn how to trade. You learn how to decorate a chart like a Christmas tree, because you skip the most important phase of trading, which is what I call naked trading. I don't mean sitting there in your tidy whities. Like, you never sat down and learned how to read price with nothing on the screen. I'm saying no indicators, no fibs, no volume profile, RSI, none of that crap, right? You never learn how to actually look at a chart and go, okay, who's in control? Where did buyers step in last time? Where did sellers smash price down? Where are the stops sitting? Where is liquidity? Instead, what happens is what? You open TradingView. The first thing you do is add on a bunch of tools like you're building a Call of Duty loadout. Indicators, fibs, MPOCs, volume profile, order blocks, fair value gaps, supply, blah, 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 blah. I'm not saying those tools aren't useful, right? Relax, chill out, bro. But you guys jump into all that stuff because you think it's going to shortcut the process. You think if you just add enough things to a chart, the market is going to start making sense. And then you end up with 25 things on your chart. But you never actually learn to identify real levels. And here's the brutal truth. If you can't trade a naked chart, the tools ain't going to save you. Everyone does it backwards. I get it, right? All they're going to do is just help you lie to yourself faster. And they always do. Because instead of learning how price behaves, you're just stacking confirmations until you feel emotionally safe enough to click that button. And that's not confidence. That's fear disguised as analysis. You're basically saying, I don't trust my understanding, so I need the chart to convince me. Think about that, right? That's insane. And when you trade like that, you're not executing. You're just negotiating with the market, and the market doesn't negotiate. All right, so how do you fix this? And it's actually way simpler than people want it to be. You stop treating every level like it's equal, and you build a hierarchy, because the market, it already has one. You've just been replacing it with something else and not respecting it. And here's how I look at it, right? First, weekly highs and weekly lows. These are the war zones. That's where big money has fought before already. That's where liquidity stacks up. That's where price either gets rejected hard or accepted and explode. Look at today on NQ. We took the weekly high and reverted right back to VWAP, maybe going lower. And this happens all the time for beautiful setups, right? So weekly open, weekly close. Weekly high, weekly low. Last week's high, last week's low for intraday trading and for bigger weekly levels. Now, weekly swings, weekly trend lines are important too. But we don't always get clean highs and lows. That's where the weekly high and low, last week's high and low come into play, just like it did today and just about every day. That's where price either gets rejected hard or accepted and explodes. Like today, we swept it and it got rejected. Now, if you don't know where the weekly highs and lows are, you're just trading blind. And next, it's the daily highs and daily lows, starting with today's high, today's low, yesterday's high, yesterday's low. If you just mark out those 4 levels, well, 8 because it's weekly and daily, you're going to get trading opportunities constantly. This is on NQ, on ES, on gold, on Bitcoin, whatever the asset is, right? So today there was a play off the daily low. We swept it on NQ, right? Swept it, reclaimed it. Nice little long up to the weekly high where we swept it and reclaimed the level. And now it's dumping again. There's 2 beautiful trades. It can't get any cleaner or more beautiful than this off of daily highs and lows and weekly highs and lows. Now, these are targets. Price hunts these constantly. Stop losses live there. Breakout traders trigger there. Reversals start there. If I had to trade with only one set of levels, it'd be these. That's it. And guess what? I do. And they print money constantly. After that, you have major range boundaries. Not every range, not every consolidation. I'm talking about the obvious ones, the ones you can see without zooming in and squinting like you're solving a puzzle. So I'm on NQ now. Let's flip to Bitcoin real quick. So major range extremes. There's liquidity above here. There's liquidity below here. This is the range. This is the external liquidity. This is the extremes. High probability areas to attack, right? Not every little tiny range in between there. But hey, look at this also. Bitcoin swept the weekly low and went 3%. Congratulations. These things happen all the time. Then you got session highs and lows. Asia, London, New York. These are intraday magnets. These are the levels price loves to run. And I'm going to show you a little cheat code here. Let me get rid of some of my scribbles on here. These are real simple to find out. So if you go up to indicators, type in sessions, it's sessions by LuxAlgo. Put a star on it, throw it on your chart, and when you turn it on, it does the heavy lifting for you. You have New York, Tokyo, London, and I just clicked on it and I removed Sydney because nobody cares about Sydney. Sorry, Aussies, nobody cares about it though. It's a very low volume session, kind of trading in noise there. But I can't tell you how many times on NQ, ES, gold, Bitcoin, whatever you're trading, we'll sweep London and run it the other way. Now, these are smaller time frame intraday magnets, right? And a lot of times the daily high, daily low lines up with these levels. Now, higher time frames are better, right? Weekly levels are stronger than daily. Daily levels are stronger than intraday. You are assuming more risk the smaller down the chain you go, just by the probabilistic nature of trading. Now, here's the important part. Everything else is optional. That doesn't mean useless. It means it only matters if it aligns with the hierarchy that I have laid out. If your fib lines line up with a daily high, cool, more people looking at it. If your VWAP lines up with the range low, great, more people looking at it. If your indicator lines up with nothing important, I do not care because the rule is simple. I'd rather have 5 deadly levels than 25 technical ones. 5 levels I understand, 5 levels I trust, 5 levels I'm willing to wait for. Because trading isn't about catching everything. It's about knowing where the fight is and having the patience to wait for price to show up there. So then the question that gets asked a lot is, okay, I've got my levels marked out, but now all of a sudden I have several levels in the same area, right? I have several levels here. There's a moving average flowing through here, maybe an anchored VWAP or a fib level or an order block, which is giving you just a huge range. What happens? What happens when you got stacked levels in an area on a chart? Well, first of all, levels are just an area, right? But err on the side of liquidity. Me as Mr. Hedge Fund or Mr. Trading Desk or Mr. Billionaire who's trying to get into the market with a significant amount of capital, I don't care about your fib levels or your anchored VWAPs or your order blocks. I care about where I can get in. I can't just hit buy or sell. I need liquidity. I need stop loss orders. Remember, every buy, there's got to be a sell. And if I'm big giant Mr. Corporation Whale wants to buy $100 million or do a big old short in the market or buy a huge option, whatever, I need your stop losses. I need those orders to be triggered so I can enter my order. Err on the side of liquidity. So if you got a bunch of levels pointing to one area, err on the side of liquidity. Where's the bigger liquidity pocket here? It's up here, right? So this top daily swing level is the level. And then I'm just going to delete these because it's not important. I can't have all that noise there because then I'm going to hesitate. And if I miss a move, I miss a move. But guess what? More often than not, it's going to run that liquidity. It's going to blow right through there and go. So again, something I mentioned earlier, daily highs, daily open, weekly highs, weekly lows, last week high, last week low. Now, sometimes you'll get nice little weekly swings. Like this is a level that I'd be interested in. It is. The market reacted there before. It'll probably react there again. It's either going to break, bounce, or sweep that level at some point in the future. I don't know when it is. I don't have a crystal ball, but big swing levels matter as well. And here's one thing that people say to me all the time, bro, you're basically just trading support and resistance. And they say it like that's an insult, like I'm supposed to be embarrassed. Like, oh, wow, you're not using some advanced institutional algorithm, order block, fair value gap, liquidity, imbalance, quantum strategy. Nope, I'm trading support and fucking resistance because guess what? It is that simple. So why are you overcomplicating it? Why are you acting like the market needs to be some mysterious puzzle that you solve every morning? Because here's what I've learned over a decade of doing this shit. You know how I can tell if a trader is full of crap or if they are actually real and trade? By how simple their strategy is and how simple they can break down the market. It's the Feynman technique. The more complicated someone talks or someone's strategy is, the more I'm like, yeah, okay, you don't even know what the hell you're talking about. Because if you really understand price, you don't need 1,000 tools. You need a few deadly levels, patience, and execution, and that's it. And the funny part is, man, the market rewards simplicity. I didn't make that up. You read, I know you probably can't see them. I got a couple bookcases behind me with the Market Wizard books and a lot of different books from a lot of like tried, true, and trusted traders throughout history, going all the way back to the 20s. They'll tell you the same thing. The market rewards simplicity. The market doesn't reward you for being smart. It rewards you for being disciplined. And this is where I lose people sometimes. And look, I lose them with what I just said and what I'm about to say, because somewhere along the line, traders got it twisted. Tools are not for creating trades. They never were. That's never the point of tools. But all the influencers and all the YouTube videos make it sound like they are. Tools are supposed to confirm what price has already told you. Let me say it again, because this is where most of you mess up. Price gives you the idea. Tools just help confirm it, not the other way around. If you're opening a chart and asking your indicators, hey, what should I trade today? Bro, you are freaking cooked, because now you're letting tools lead you instead of price. And tools, they don't understand context. They don't understand liquidity. They don't understand sessions. They don't understand who's trapped. They just spit out information based off of historical data. So here's the rule. Tools are for confirmation, not creation, and that's it. They're there to help you answer questions, not to make decisions. For example, VWAP. It's not a buy or sell signal. It just tells you one thing, value. Am I entering near value or am I chasing extension? That's it. If price is stretched way above VWAP and you're chasing longs, bro, you're late. If price is dumped way below VWAP and you're chasing shorts, you're late. That's confirmation. Volume tells you participation and effort. Is this move already being supported or is it just drifting? Because price can move on low volume, but real moves need real effort, real participation, and then momentum. And momentum doesn't predict anything. It tells you if the move has followed through or if it's dying. One of the most triggering things to me is when someone says, yeah, but that's oversold or undersold or overbought. Oof. None of these tools tell you where to trade. They tell you whether the area that you're already interested in, the idea that you already have, if it makes sense. So if you're using tools to find trades, you're doing it backwards. And if you strip this whole rant down to one sentence, it's this: tools do not give you an edge. They just help confirm the one that you already have. Now, I already know what some of you are thinking. Yeah, but that doesn't work on my time frame or how I trade. Cool. It doesn't mean the level is wrong. It means you don't understand time. Because here's the thing, right? A scalper, a day trader, a swing trader, and an investor can all be looking at the same exact level and still be right. They're just playing different clocks. An investor is looking at weekly and monthly levels. A swing trader is living on the daily and the 4 hour. A day trader might be working with the hour and the 15 minute. Scalper might be zoomed in on the 5 minute or the 1 minute. Different executions, same battlefield. And this is a part people need to hear. The principles stay the same, only time changes. Structure, it still matters. Everything still, liquidity still matters. Acceptance and rejection still matter. Confirmation still matters. Price doesn't suddenly behave differently because you switch time frames. And this one's important. Liquidity's liquidity. Time just decides how long you're willing to wait. That's it. If price is approaching a major level, it doesn't care whether you're a scalper or an investor. It's still a decision zone. Your time frame just decides whether you're holding it for 5 minutes or 5 months. And once you understand that, trading just gets way simpler. All right, so look, if you're watching this right now and you're like, okay, Ben, I get it, dude. My chart's a mess. What do I do? Good, I'm gonna tell you exactly what to do. And I want you to actually do this, not just nod your head like you're learning something and then go back to drawing 40 lines. Here's the challenge. Reset your chart, like literally delete everything. Delete the indicators, the zones, the fibs, the trend lines, delete the garbage and start from 0. The problem is everyone starts at 100. They don't start at 0. Now, step 1, mark the weekly high and weekly low. Last week high, last week low, that's it. And if you can't find those, if you can't trade those, you shouldn't even be trading, and I'm dead ass serious. Then step 2, mark the previous and current day high and low. Now you have important levels that already matter more than what 99% of retail traders draw. And if you have a couple levels close to each other, err on the side of higher time frame and liquidity, and then just delete the noise. Now you have levels. And step 3, mark the obvious major swing high and swing lows. Not every little wiggle, just the obvious ones, right? The swings where the buying stopped and the selling took over, or the selling stopped and the buying took over. And you have to zoom in to convince yourself it's not a level. And step 4, identify the current range. Where is price trapped? Where is it expanding from? And step 5, if you're an intraday trader and scalper, mark the session highs and lows if you're day trading. Asia, London, New York. Those are magnets. Those are targets. Those are liquidity pools. Now listen, if you do that and your chart has more than 10 lines, you're still doing it wrong because you're not mapping the market. You're trying to protect your ego. You're trying to make sure you're never wrong. And that's not trading. Trading is about having a plan and accepting risk. And here's the line you should remember. If your chart is cluttered, so is your mind. And that clutter shows up in your execution. Now, this is what separates real traders from people who just use crayons and gamble and draw on charts. Most traders wake up every day and they're hunting entries. They're chasing candles and momentum. They're reacting to every little 5-minute move like it's the end of the world. But professional traders, we don't do that. Professional traders don't trade everything. They wait, they map the battlefield first, they identify where liquidity is sitting, they identify where the market is most likely to make a decision, right? We don't guess what that decision is. It's either gonna break, bounce, or sweep. Pick one and study it and learn it. And they, right, sit there. They sit there like a sniper because the goal is not to trade more. The goal is just to trade better. And that's why I keep saying this. You don't need more lines, more indicators. You just need more patience and discipline. You don't need 1,000 things. You need 5 deadly levels and the discipline to wait until price comes to you, because the market doesn't pay you for being busy. It pays you for being right at the right time. So clean your chart up, build a hierarchy, use tools for confirmation, not creation, and just stop overcomplicating something that was never meant to be complicated. Because at the end of the day, the best traders, they're not the smartest, they're just the most disciplined, right? And look, if you want to learn how I do this live every day, I call these levels out in real time inside Discord. We trade them live, we break down the sessions, we focus on execution, not hype. Free training videos, tacticaledgetraders.com, right? And this video helped you. If it kind of awoke something in you, drop a comment and tell me how many levels were on your chart before you watched this and how many you got after, because I already know some of you are about to probably delete half your screen. Appreciate you for watching.